Okay, folks, welcome to Thursday Night Stock Charts Live. Thanks for joining in. Another Thursday. What we do on Thursday evenings is that we review the weekly charts to identify how we may want to position ourselves into the new trading week. This is just a glimpse. It's the beginning of our research going into next week because we have one trading day left to go and a lot can happen, especially during earnings season. So what we're going to talk about today are economic data, some earnings, some Fed conditions, and the balance sheet of the Federal Reserve. Because I have one question I'm going to get to in a moment that I'm going to seek to answer, but I have a question for the group. Why are yields dropping? Enter your comment. Give me your thoughts. Why are yields dropping on the 10-year yield? So before we get to it, I want to talk to you about our friends over at TrendSpider. Folks, don't settle for ordinary trading software. Go to the next generation of trading software with automated technical analysis. Automate your grunt work, speed up your analysis while improving your accuracy, reduce costly analytical, I always do that. Reduce costly analytical mistakes and find winning chart setups with their scanners. Time your trades with precisions. I use TrendSpider constantly. I'll be using them tonight for members stock chart request. So stay tuned. I'll show you how I use it. And the version that we use is the same exact version that I give away to our gold level members who are members of the Contrarian Trader. It's included with their membership, silver level as well. Let's get to it. So we have earnings season upon us. Earnings, not that bad. Banks drawing down their loan loss reserves. That's good stuff. Gives them more money to lend. Economic data, well, let's take a look at it. Last week, we all know about the PPI. That's the Producer Price Index. Inflation at the producer level. The question I always have, because it's generally released first, is if there's inflation, is that inflation being passed along to the consumer? We find that out during the CPI, the Consumer Price Index, which was released on Tuesday. What happened? A big beat on the headline number and a big beat on the core number. So we have inflation all over the place, especially in energy prices, and it's only going to get worse because I'm going to show you a chart of oil in a moment. I was buying energy stocks today, shorting high tech. And we'll talk about that. We'll talk about that in a moment as well. What else do we have? Import price index. Inflation. Also, we had retail sales, a huge beat. There's only one problem. We saw industrial production came in roughly half of what was expected. It's the best number since July of last year. The however it's a huge miss. So I just spoke to you about inflation that's been reported for the March period. Now what we're looking at is inflation moving forward, because remember, the stimmy checks didn't go out until what? Late March. Now we have initial jobless claims, which thankfully dropped. More people are working. Great. Good to hear. Retail sales are surging. People are using those checks to buy stuff. They're feeling more confident. The only problem is we're not producing enough stuff. So if you thought you had inflation last month, wait till you see inflation next month when you have all this money, this cheap printed money chasing fewer goods that are being produced. So I go back to why are yields dropping? I'm going to go to the comments, say hello to people, and see if I have any answers. John, I checked out job. I didn't see any options chain there, pal. Can you just recheck that symbol for me? Just make sure that's accurate. NVIDIA, we could do that. Who's got the puppet strings on the 10-year yield? Good man. You're close. McCarter, hi, Bob and chat. Bullish corn, beef, cabbage. He always gets me. Bullish corn, beef, and cabbage tonight. Very good. You got me on that one. I thought you were going to say bullish corn and leave it there. No, right on. Good stuff. Denny. Hey, hello to you, Denny. JW, good to see you again. GLW from McCarter. RL, how are you, my friend? Fed Manip. You guys are smart. You guys are smart. Paul M, hello. Mr. G, yields dropping from people are spending their money on Bitcoin. I don't know about that. I'll take that one under advisement. M. McNeil, message retracted, but hello to you, sir. Nestor, hello. Hey, Bob, yields dropping cause of strong retail sales and jobless claims. No, this should go up. They should go up. Things are getting better. When you hear about weak economic data, you see a drop in yields because it's an expectation that the Federal Reserve is going to be forced to pause on any yield Fed rate hikes or maybe drop them. So normally you get a drop in yields when you have bearish economic data. The most bearish economic data that we could say for the week thus far is industrial production, but this is the best number since last July. So it's not holding water. I think what's been touched upon thus far is an indication about the Federal Reserve. We're going to go to that in a moment. Pete, hello, Pete. Franklin. Hey, Franklin. Thursday evening already, my friend. Steady gains. Gold NYSE. Love it. Love it. We'll talk about gold in a little while. Gold miners. They're going higher. There's going to be a caveat to that. So perhaps not straight up higher. I'm going to give you that caveat when we go over the weekly charts of gold. I love gold I love gold, silver, physical. I love the miners, both gold and silver. And McNeil, XOM, we're long. We'll go over it. Yeah, I looked at that, John. Yeah, that's what came up from me, G Group. It said no options, at least here in the States. Here, I have it up here. Options, no options data available. Because usually stockcharts.com is inaccurate. Not usually, I shouldn't say that. Many times they're inaccurate. They say options no here as well. But I double checked it under Yahoo Finance. So if you have a link, we'll take a look at that link. Okay, you got it, John. All right. So let's answer the question about yields. Let's bring up, first off, I want to talk about the Financial Conditions Index. This is a pretty good read. So we're not seeing a lot of pressure on lending right now, which is good. So we're seeing good things underlying in the economy. But look no further than this right here as to why, despite good economic data coming out, more people not filing initial jobless claims, look no further than our friends at the Federal Reserve. This is as of today, right? Today's the 14th. So yesterday, 14th. This is as of yesterday. Yesterday, the Federal Reserve's balance sheet hit a record $7,793,104. That is roughly $6.9 trillion more than what it was right before the financial crisis. And it's only going higher. So if you're wondering why yields are dropping right now, that's the reason why. And believe it or not, I was toying around with the seasonality tool on TrendSpider. And we started out 2 weeks ago looking at April as a seasonally favorable month for the overall stock market, the SPY we were looking at. So April, one of the best months of the year. Then I pulled up the TNX because over the past couple of months, what we've seen is weakness on the front end of the week. Then on Fridays, we'd see a move up higher. And sometimes you get an anecdotal opinion, and I wanted to validate it, to speak about it tonight. So what I did was I went back 4 years, and I said, okay, let's take a pulse of the TNX. This is the 10-year yield. What does it do? How does it trade on average per day of the week? And going back 4 years, you can see that Fridays, it's up roughly 42% of the time. Thursdays, generally the worst day of the week, along with Tuesdays on a 4-year basis. Now fast forward to 2021. Remember, Thursdays, 40%, Fridays, 43%. That all changes in 2021. And here's what validates our anecdotal feeling about yields and how they trade intra-week. Now, granted, this is only a 3-month period, but it's a validation of an assumption. And you could see here that the first half of the week is poor, but then we begin to trend up higher. And Friday is by far the best day out of the year so far. So when we go over the chart of the 10-year yield, just keep that in mind that we have one trading day left to go. I always like to say that because by Saturday, when I'm doing these same charts on a weekly time frame with members, planning out the next trading week, all of a sudden I reference, wow, look, remember this chart from Thursday night? Now look at it. Holy cow, what a difference. Many times I'm saying that about the 10-year yield. Why does this matter? Let's talk about it. Let's go to the weekly charts. Here's the yield curve. And here's one reason why I believe that perhaps tomorrow may not be as great as the day that I'm expecting because of technically overbought conditions. The yield steepening has, for the first time in many, many months, taken a pause. Now, it's still early in the month. We still have 15 days left to go. Maybe we'll rally back. Now, the 10-year yield, we are very close. This is a weekly chart. We are nearing support at around 1.56, around there. Where do we close? So we're about 2 bips away, 2 basis points away from hitting support on a weekly time frame. Okay, Invest, hello to you. Thanks for joining. So we know that when yields are pulling back, tech will go up. So what have you been seeing rallying over the past 2 weeks as yields are pulled back? Well, look no further than your triple Qs. They broke out, new all-time highs. Here's a 10-year yield. Trip Qs. They trade inversely of one another. Whereas the banks, they've kind of stalled out here a little bit. Yeah, they put in new all-time highs, but they're stalling out. They like rising yields. It helps their net interest margins. So I think that the banks are going to continue up higher here as soon as yields bottom out and then continue up higher. Also, what's taking a pause, but we have taken advantage of the pause, and that is the pause in energy stocks. Energy stocks like rising yields. Money flows into energy, money flows into the banks, money flows into transports when yields are rising. They flow out of tech. So since yields have been pulling back, you've had energy, which is consolidating. So we like energy. So this is the dichotomy that we find ourselves in right now. But the one point I want to make up before I go to the weekly charts is this. on a intraday basis, this is the 10-year yield, 4-hour time frame. Remember, economic data came out today. It was pretty good. Inflation data coming out, pretty good. It's pretty hot. There's a lot of inflation out there. And oil. Let's take a look at oil. Oil breaking out on the week. Why wouldn't yields go up? And look at what they did. What did I do with it? Here we go. Here's a 4-hour chart. They're absolutely knocking it off the charts. I mean, this is becoming ridiculously oversold relative to the third standard deviation Bollinger Band. I think they're probably going to push it down one last time, and then you're going to get a nasty reversal to the upside off of support on the 10-year yield. With oil breaking out, you're going to see energy take off. You're going to see the banks take off. I'm not predicting a crash right now. I'm predicting a correction in tech stocks, the big mega cap tech stocks, just as we saw several weeks ago as yields trended up higher, up to 1.7. What did the tech stocks do? They rolled over. So inflation's out there. So let's take a look at the weekly charts. Tips. The tip market is telling you, it's saying to you, it's doing this to you. It's saying, hey, there's inflation here, dude. Buy me. Because they broke out. Well, they appear to be ready to break out in the week. One trading day left to go, right? So it looks as though we are breaking out in the week. Love the Stokes, love the RSI. So it appears as though we're going to make another run. I was concerned about a head and shoulders setup, but it looks as though that may be negated. Can't rule it out yet, but it looks like it may be negated. Volume is trending in low on the week. Tips looking very strong. Inflation is here. Why are yields dropping? Look no further than your friends at the Federal Reserve. The US dollar getting annihilated. Absolutely annihilated, as it should. Inflation is on the rise. Sorry, folks, dry throat. So it looks as though we're going to test support at 91.50 on the dollar. Do we bounce? Not quite sure. Let's take a look at a daily chart. I want it to bounce. I want gold to pull back in again. We're going to rally here. In the next couple of days, we're going to rally because we're testing the rising 50-period moving average. Stokes are very, very oversold. I'm not saying we can't pop up higher then roll back over. I'm just saying that we're due for a dead cat bounce here. And with that, that should bring gold a little bit back in, perhaps, unless gold just says, you know what, we're ignoring the dollar, we're ignoring rising rates, and we're just going for it. The market's told us, the tip market's telling us, inflation's here, it's going up higher. Government's only pouring gasoline on the fire. So might as well take it up higher. That's inevitably what's going to happen. I'm not sure the market's ready for that yet. So the dollar, look for a pop here fairly soon, but I expect it to go a lot lower in the future. The VIX weekly time frame, we're struggling here. We're struggling here. So we're attempting to hold on to a support level in green. We may close above it tomorrow, but if we fail to do so, we're probably heading down to a 15 handle on the VIX. We haven't been there since early February of last year. But then you got to think about the old saying, when the VIX is low, you got to go. When the VIX is high, you got to buy. Now, so you should have been buying back here. And maybe down here, you stay a little bit lighter with your long positions. If not, nibble on the short side. But be careful what you short. The Dow Transport, new all-time highs this week, but Assuming we close tomorrow where we closed today, doji star formation, a sign of indecision, and we are overbought on RSI at 78.25. Volume is no doubt going to come in well below average. MACD histogram losing momentum. Beware the transports. Daily chart. Stokes are very extended and rolling over. Volume light. I think they're breaking it out. I think they're breaking it out. And notice how the transports have really just been trading sideways for the past couple of weeks, along with yields dipping down. If those yields pull back up, the market will perceive that as being economic growth, and they're going to take the transports up higher until ultimately the whole market can't stand a two-handle on the 10-year yield. We've been there before, and that was back when that happened, when the stock market buckled at 2%, 2.3% on the 10-year. I mean, everything just buckled. Economic conditions went like that, and that's when Powell had to say, okay, no more rolling off of the Fed's balance sheet. We're going to be looking at rate cuts. That's when Trump was beating him up in the media all day long, if you remember that. And that was about, I don't know, $6 trillion worth of debt ago. Now we're a lot more in debt. I don't think we're going to make it up to 1.9 before we see this economy buckle. Dow Transport's weekly chart, new all-time highs. Volume horrible. We close at the highs of the week. Volume very light, but we're probably going up higher. S&P 500 weekly chart, new all-time highs, up over a percentage point on the week. Horrible volume. I mean, dismal volume. Daily chart. We've gone parabolic on unbalanced volume. One of our members asked me to put this up a couple of weeks ago. And yeah, we've broken out here. But you take a look at the daily chart, and here's a breakout today. But look at the volume. Here's your moving average in red. Volume's just been horrible. So the way I interpret this is that, you take a look at, let's bring up Microsoft, of which we booked profits on a short. And now I reopened another short of Microsoft, but not short the common shares. I sold deep out of the money, naked calls. So we generate cash flow. That's been our new strategy, and it's been working out pretty well. So Microsoft, if you take a look at a 15-minute chart, you can see how managed this has been. We broke out back here early April, and every dip has been bought, and every open has been gapped up for the most part, with few exceptions. We're gapping up. I don't think we're going to gap up. We may gap up tomorrow. I think we may hit a brick wall because you have a ton. Tomorrow's options expiration, you have a ton of open interest at that 260 strike price. So you're going to see some pressure there at the 260 level. I would be surprised to see a close above it. All right, Tues, new all-time highs. Daily chart. We're going higher here, man. We broke out on the 13th, and I was talking to members on Market Wrap last night. I'm saying, because we stopped out. When we broke out here, I was short. I had a short position on the Tues. We broke out. And on that breakout, I said, no mas. Done. Done. I'm out. So we broke down on the 14th. So this was a bull trap. And it's tantalizing when you stop out to go jumping back in when the market says, you know what, maybe you were a little bit too quick on the draw with that stop loss. Don't get lured into that behavior. Very poor behavior. Once you stop out, rethink your strategy. Don't torture yourself over it for too long. Because if you obsess, you're going to make bad decisions. Let's do a hypothetical. What if I would have reopened that short on the bull trap yesterday? Look at me. Look what would have happened to me this morning. I would have been at a loss again. And the reason why I didn't short or reshort the Qs yesterday, there was no volume. This wasn't institutional selling. So there was no reason to go shorting the Qs. Yields were still dropping. That means Qs are still going to head up higher. So we weren't going to fight it. We're changing strategy. We live to play another day. The banks we already talked about. Technology, we're going to move up higher here. Look at this volume, though. Horrible, horrible volume. Daily chart. New all-time highs today. No volume. This is all shorts covering. Mom and pop buying 100 shares of the XLK. And computers. They're just keeping the market in check. If you have light volume, they could just 100 shares. Just keep the market up and going. So don't fight this right now. There will be a time. Now is not the time. Semis. We're down on the week. I'm shocked. NVIDIA ripping. I think this is a pause that refreshes. Weekly chart. Yeah. Semis are a buy. You take a look at the daily chart. Take your crayon out. Let's just say we closed at resistance. We have a bull flag setup. RSI is broken out already. So we have an indicator already leading price performance. So semis looking rock solid. Brazil, emerging markets, commodities trade. Doing very well. Are we back above 100? No, we're not above 100 yet. I've been reluctant to re-enter this trade. We booked profits a while ago. But with oil breaking out and the dollar breaking down, it's tempting. We're breaking out yet again. Brazil's looking pretty good. Now, I'll tell you one area that's been getting annihilated, and we're going to be involved very, very soon, and that is India. Unfortunately, India is getting ravaged by COVID, and their stock market has been getting hit. So we're going to be looking to buy this pullback soon. So we'll keep an eye on India. VNM is another one we're watching. Oh, God damn it. Broke out. I keep waiting for the pullback. Keeps going up higher. I was talking about Vietnam and India when COVID broke out. I said, I've been talking about it way too long. I should have acted. Oh, well. EDC, emerging markets, consolidating very nicely. Weekly time frame. Dollars dropping. This is looking attractive now. These Stokes need to hook up. Daily chart. Nice. Nice. Higher lows on Stokes and RSI. We're ready to break out here. EDC looking good. Just remember that dollar may rally soon, so you may see a little bit of weakness on the EDC. But longer term, it's going up higher. LABU. Biotechs. Bullish key reversal bar. I know Franklin's on. Yeah, Franklin. Yeah, I know. I was talking. It was around 12. Yeah, you're right. VNM. God damn it. All I keep doing is waiting for it to pull back. Be ready for April 15 through 20 during U.S. summit in Taiwan. China being awfully suspicious. Missile drill in the middle of cargo. Shipping canal. There's going to be a conflict sooner or later. It's going to happen. Consumer discretionaries. Weekly chart. A little bit of topping action. Horrible volume. Daily chart. Good day today, inside day. It's probably going to pop up higher. No volume. You know, what do you say when you have the stock market hitting all-time highs, yet there's no institutional support? I mean, it's crazy. So the point I'm trying to make here, here are the cues. They're going to break out. They're going to move up higher. But there's no volume. So what happens when yields pop up higher? You're going to see these things tank. What else do we have? Oil, we kind of already touched upon this. Oil moving up higher. We like Brazil. We like energy. We bought energy today. Daily chart. Popped up higher, holding gains. We may pull back and fill this gap here, but that's okay. Oil going up higher. Gold. Gold is at current poised to possibly recapture resistance. We've been waiting for this for a while now. Volume is not good. Daily chart. The daily chart looks phenomenal. I mean, when you get a W formation at the 50 level on RSI, bullish. Higher lows on Stokes rising above 80, bullish. I mean, it's nice. It looks good. We may pull back and do a retest of support here at, call it 1755. That's a buy. Gold's a buy. Gold miners. All right, so here's my dilemma. My members know that I have this dilemma, but I share it. I'm pretty open. When we were selling off a couple of weeks ago, it was this week here, the week of the 29th of March, I sold covered calls to protect the position that I had because I didn't want to sell. And I sold the 47 strike April 30 call options for about, I think it was 84 cents, something like that. Those options now are worth $1.84, if not more. So I'm underwater on the options. I'm underwater on the shares now because I'm capped at 47.84. That's the 47 strike plus the 84 cents I got paid in premiums. So the question is what to do. Do I manage it? So the thought process here is that I don't need to do much. The reason is that I'm also long of the NUGT, which is the leveraged ETF putting you long of the gold miners. And it's doing well. We're up over 5.5% alone on this trade. But I don't want to keep this as a longer term investment because leveraged ETFs have time decay, and they're inherently volatile. And I've seen Nugget literally break. It used to be a 3 times ETF. Now it's a 2 times. Why? It broke during the March sell-off of last year. They couldn't reprice it properly. They reprice these every day. It's a derivative on a derivative on a derivative. So good luck repricing it every day during a blood in the streets. So how do I protect this position? There are a couple of things I could do. One, I can wait it out. If my hypothesis is that the dollar is going to pop here for at least a couple of days and that yields are going to pop in the next couple of days, that should put pressure on gold and the gold miners. At some point in time, though, people are going to realize that inflation's here and they're not going to be able to move rates up quick enough to cap inflation, and the miners are just going to ignore the pop higher in yields, and the dollar's dead longer term. It just doesn't know it yet. So what we'll probably do is take advantage of one of 2 things, or maybe a mixture of both. I don't know. I could roll out of the 47 strike, roll into the 55 strike I could probably get a break even on that. But however, I have to sit until August at a 55 strike. That's going to drive me crazy, but I may have to do it. So how do I keep myself out of the insane asylum? I'm probably going to sell puts initially against the 46 and the 47 strike price. That'll keep me long, generating cash flow, and that's consistent with our current philosophy of trading the markets, is continuing to try to generate cash flow. So those are the thought processes at this time. Hopefully we get a significant pullback on the GDXJ and those options expire worthless. I don't think that's going to happen. So more to come, members. Silver, we're going higher here. There's no 2 ways to put it. Actually, this is silver miners. We're long of this. This is going up higher, a lot higher. So we love the silver miners. AGQ leveraged ETF putting you long of silver. Big breakout this week. We're up nearly 5%. What are we up on SILJ? Up over 2%. So love the sector. Looking good. That's the weekly charts. If you have any questions, just ask, and we will answer those questions. JA, the market is in fuego. You got it, brother. JW, you have VIX calls. Okay. What's striking expiration? McCarter, Black Swan event. We get a lot of those every couple of years now. So, yeah, we do. All right. So let's take a look at some chart requests. I need to go to the members area first. What time is it? We have about 20 minutes. First, need to go and see what members requested. My website's so slow. Sorry for the pause, folks. I'm waiting for it to load. It's really slow tonight. Come on. We will be using TrendSpider. All right. We are having technical difficulties here. All right. So let's go to the chat box first. Members, I will get you. Mr. G, NVIDIA. I was looking at the video earlier. Oh, before we leave this chart, 90-minute chart, TNX. Here's the value of automated trend lines. Click of a button. Right, you want to know where support and resistance levels are? Come over here, trend lines, click, and there they are. We hit support today. We broke support yesterday. We hit support today. I think we're bouncing very, very soon. NVIDIA. Now remember, the semis are down on the week. Yet NVIDIA is just insane. Big breakout on the week. Volume is good. Very, very good volume. We are leaning into the third standard deviation Bollinger Band. A little bit of a concern there. Daily chart. We're going up higher. I think we're going up to, again, power of the automated trend lines, folks. And you may be saying, how is there resistance above when we're at all-time highs? It's a great question. What the algorithm does, it extrapolates the peaks going back months, if not years, and extends them out. It extrapolates them out. And that's how you get resistance. So expect resistance at the 663 spot 41 level. Now, one strategy here, if you're long, you could look to sell covered calls at the 660 strike going out a week or two. So you generate some cash flow. You know you're probably going to pause there for a while. So that would be a good strategy. And you still have some upside potential before you hit that mark, about $15 of upside. I want to check out the 90-minute chart. I've been toying around with this. It's a pretty interesting chart. Note how, again, automated trend lines. Note how we've been in this uptrend channel. We hit this upper band in red. We retrace down to the lower band in blue. We're up at that upper band in red, and we're just coming off of it. So look for, perhaps, a pullback to this lower band of support at, I would use this line here, the VWAP in conjunction with the rising lower band of support. Entry point, let's call it 627 per share. I like NVIDIA. I think it's going up higher. All right, GLW. I'm kind of cheating here. 90-minute chart looks very, very good. Weekly chart first. Nice. So this is why we do what we do. All right? Our strategy is multi-time frame analysis. If you're wondering how I got hooked up with TrendSpider, Jake and Dan over there, and I know these guys. We're friends. I know them. We've met each other. We've gone to CMT symposiums together. That's the Chartered Market Technicians Association. And they're great guys. So I met them because of their appreciation of multi-time frame analysis. When I saw it, I was like, I'm hooked already. And what you can do here is on a weekly chart, and I don't know if there's monthly support or resistance on this chart. There should be, but I'm putting myself out there, untested, unscripted, on a tightrope. Will I humiliate myself? Monthly chart. Click of a button. On a weekly chart, I just added on in dashed line, monthly support in green. On a weekly chart, in solid line, is your weekly support level in red. Now, what we did here, we broke out the week of March the 22nd through monthly resistance and weekly resistance. We retested last week, continuation move up higher. We retested the week of the 29th, continuation move up higher last week. We're going to break out here, if not tomorrow, early next week. We're going up higher. Daily chart. This is a buy. We broke out today. No two ways about it. And going back to that 90-minute chart I teased a little bit with before, look at this consolidation on a 90-minute time frame. So Corning is going up higher. Very bullish. I like it a lot. Very good chart. And if I could ask you folks to please smash the like button. I mean, destroy it, hammer it, share with a friend, subscribe to the channel. I'd really appreciate it. Gold we went over already. Coin I could go over. There's not too much to talk about here. I'll go over it, but there's not a lot of data. We'll use a 15-minute chart. I think that's the best one to use right now. I think the all-time high so far, yesterday's all-time high, was 429. Where are we at now? 322. I'd like to see a breakout on a 15-minute time frame. What do we close? 328. Is that right? No, we closed at 322.75. Listen, I don't think that they're going to let this thing drop like a rock. It already has dropped like a rock. I don't think they're going to let it fall apart until at least after the lockup period, so that all these guys can cash out. The banks, the insiders. So if you wanted to spec here, I'd be fine. Stays very, very small. Who knows what true value of this company is? And then if we close above 335 per share, then I would add more. I would get more aggressive. So that's my take on coin. I mean, there's not much more to add to this conversation because it's brand new. Literally not even 48 hours old. So that's coin. Exxon Mobil we went over. Did we go over that? No, we didn't go over it. We went over energy. Exxon Mobil. Pete, I didn't forget about Workhorse. I know I skipped you. All right, Exxon Mobil. It's yielding over 6%. We've had a nice pullback, consistent with the energy sector. But here's what happened this week that's important. Yesterday, we broke out of this triangle formation. Today, we came close to doing a pullback and a retest. Maybe we'll pull back again tomorrow. I'm not too worried about it. I think that we're at the beginning of another leg up higher for Exxon Mobil. And remember that there's a very tight correlation between energy, Exxon, and oil. What did oil do this week? It broke out. What do I expect Exxon and energy to do? I expect it to break out. So very bullish on Exxon. Workhorse. High beta. Not loving it, Pete. It's broke. It's broken. New monthly lows. Weekly chart. We broke weekly support. They were trying to consolidate it here and failed. Maybe we'll rally back tomorrow, but I tend to doubt it. Daily chart. I don't like it, Pete. I think it's probably going to go lower. You saw volume into the close to the downside, not what you want to see. I would avoid this. What else do we have? JOB for John. This is another stock that's a failed breakout. So here was your uptrend here, John, right? So here you go. We're putting in higher lows, higher highs. We attempted to break out. We were rejected. I'm not sure what happened here. Something happened because this is a vicious move to the downside. I don't know this company per se. I'm not familiar with the news on it. But the fact that it's trading below $5 tells you really all you need to know about it. It's broken support this week. I would not be a buyer of this stock. And if you're looking for a support level, support is at 51 cents per share. You may get a pop-up higher here as a dead cat bounce, but yeah, this could go a lot lower. And if you're using RSI to ascertain overbought, oversold conditions, listen, when you have a stock that's below $5 per share, if you read Technical Analysis for Dummies, they really don't differentiate between stocks above 5 or below 5. They should, but they don't. And they say that a stock that trades down below 30 is oversold. Hogwash. Nothing could be further from the truth. RSI on a stock below 5, I expect to trade down below 10 before I would even consider buying it. So while it may look oversold, it's not. Just when you think you caught the low, it goes lower. So don't get lured into it. Sure, can it bounce back for a day? Sure. One day doesn't make a rally. It could easily roll back over. I would avoid this. There's plenty of other fish in the sea to go chasing rather than this one. What else do we have? Steady. I did tips in gold, ERX. I know ERX. Why can't I remember what the heck that is? Oh, it's this right. Okay. Energy Bull. Yeah, it should go up. I'm bullish on energy. It's trading with the sector as it should, you would hope. Nice consolidation. I think it goes up higher. Bullish. Thanks, Franklin. Hit the like button, folks, please. Beg of you. Is that it? FCX. I haven't looked at this one in a while. FCX. Looks good. You would expect it to. This is a commodity play. Copper, all sorts of stuff. Here is your uptrend line. I think we're going up higher. Weekly chart. Good volume so far this week. We're above average. It's being accumulated. Up nearly 11% on the week alone. Wow. Healthy move. We broke out yesterday. Again, the power of the automated trend lines. We broke out yesterday. Continuation breakout today. Remember, you're going to have resistance up here, though. So what I would do is I'd create an alert. I look for a breakout. I don't want any sensitivity. I care about only the close. Or if by chance we happen to pull back to support, we'll keep some sensitivity on. And we're good to go. So I would add here. I don't think we're going to get there, but you never know. Weirder things have happened. And I would add more or open a position on a closing breakout above weekly resistance at around 38.54, around there. It's going up higher. FCX bullish. GD for defense play. I always wonder what's going to happen with GD, because I think that aircraft carriers, which I believe they build, are archaic, a thing of the past, relics. And they're going to, that being said, they're going up higher. It's breaking out. We broke out in February, continuation move up higher. In March, continuation move up higher this month. Bullish. Weekly chart. A little bit of stalling action here. What I would do, set up an alert, keep a little bit of sensitivity on. Daily chart. Nice consolidation on a daily time frame. I think we're breaking out. Bullish. General Dynamics is going up higher. MO, we're going to leave off with MO. I'm beginning to fade here. Monthly chart, we're seeing consolidation along a VWAP bar at, what is that, 5092? Weekly chart. Oh, beautiful. Again, the power of the automated trend line. There you go. We're attempting to break out this week out of a wedge formation. This is going to get resolved very, very soon. If not this week, next week. I think it's going to get resolved to the upside. Daily chart. We broke out on a daily time frame. I think we're going up higher here. Daily chart. We also saw a blue raindrop. That's a sign that something's going to happen. It's a sign of indecision. And next day, what do? We broke out. Mo, bullish on, like it. And with that, like the channel, please, video, whatever this is, live stream. Larry, you're welcome, my friend. Anytime. Anytime. Thank you, Bob. Greatly appreciate your market judgment. We thank you, sir. We trust the fervor that you have for what you do. Thank you very much. Thank you very much, Larry. With that, folks, thank you very much for joining in. Enjoy your weekend. And don't forget, smash the like button, subscribe, and I'll talk to you soon. Have a profitable trading day tomorrow. Be well.